Hey, tech-savvy investors. Welcome to the Wednesday edition of the Tech Stocks Daily Podcast. Buckle up because today's lineup is brimming with intrigue and excitement. First, we're diving into the unfolding legal drama surrounding supermicrocomputer. Think courtrooms and corporate mysteries. Then we'll hop over to Apple, which is facing a hiccup in Indonesia while also spreading some shiny iPad mini magic. MicroStrategy's in the spotlight too, surfing the volcanic waves of Bitcoin mania. And don't miss out on Oracle's jaw-dropping returns and their bold new cloud partnership with the US Army. From legal showdowns to tech upgrades and crypto highs, today's session promises riveting tales of fortune, strategy, and innovation. Stick around. Today's hot topic: Supermicrocomputer Inc. has landed in the spotlight, not just for its prowess in AI infrastructure, but more dramatically for some recent legal rumblings and financial eyebrow-raising moments. Grab your popcorn, tech, and finance geeks, because this story is cooking with all the juicy details of the tech world and investing saga rolled into one. First up, let's address the stock performance. Supermicro showed off its muscles in AI with an impressive diversification in its infrastructure capabilities. Yet the recent 6-month drop of over 51% has puzzled investors. Despite a decent year-to-date rise, analysts are intrigued by the stagnation. Think of it like a magic show where the assistant cueing the next astounding trick is holding a script covered in question marks instead of smooth transitions. The stock seems stuck in a standstill as it cautiously tiptoes between its short and long-term moving averages. And when the Bollinger Bands start squeezing in, market aficionados know it's the spicy soundtrack before a potential plot twist, suggesting possible significant price movement on the horizon. But wait, there's more. Faruqi & Faruqi LLP is turning the scrutinizing legal eye onto Supermicro as well. In a manner befitting a crime drama, this national securities law firm is investigating whether the tech company might have been playing with shadows in its financial statements. There are damning claims about embellishing sales figures and keeping company expenses a bit too coyly under wraps. Like an Oscar winner revealed for speeding tickets, old skeletons are being dragged out. Yes, including the re-emerging troubles with ex-execs and some eyebrow-raising connections to related parties tied up with trade bans amid geopolitical tensions. Adding another layer to this saga is Con Swick & Fody LLC, a firm closely watching Supermicro through legally astute binoculars. These chaps, along with whistleblowers and former insiders, blow the whistle on potential funny business they say might have included fantastical accounting leaps and some relaxed views on rules and regulations. Apparently, even the DOJ is tapping its chin over these revelations, chipping away at the bard's idea that no news is good news. With multiple class action lawsuits hanging at the edges of this narrative, the tale of Supermicro's stocks becomes less of a fiscal footnote, a signal that leadership might need to call for a round of strategic and transparent consoles, perhaps with a strategic reboot in hand. So with earnings rolling in soon and the intrigue levels dialed up to 11, investors, analysts, and maybe you in the audience will be glued to this unfolding tech drama. The next episode promises benchmarks and potentially more figurative courtroom drama, temperatures rising, a hot front that tech aficionados can't wait to see cool off predictably or flare up even more. Apple was having quite the action-packed day in the news today, making headlines for a variety of reasons that range from serious international business matters to lighter unexpected high-tech hijinks. First up, Apple's iPhone 16 hit a major roadblock in Indonesia. The Indonesian government slammed the brakes on the sales of the latest iPhone model because Apple fell short on its investment obligations in the country by just $15 million. A small sum for such a big company, but important enough to cause quite the hiccup. Apple was supposed to invest a total of $109.59 million, but they have only managed to put down $95.08 million so far. What's the repercussion, you ask? The inability for Apple to extend their local content license via the TKDN certification process, which is essential for selling their tech there. This ban is turning heads. Considering how well the iPhone 16 is doing globally, you'd think Apple could stick the landing on this one. Next, Apple revealed an upgraded version of its iPad mini, the first significant facelift in 3 years. The new iPad mini boasts an AI-heavy A17 Pro chip underneath its adorable mini chassis. Faster CPU, enhanced GPU speeds, and for you gamers out there, hardware-accelerated ray tracing, bless your pixels. However, the most visible change is the inclusion of snazzy new colors, purple and blue, which seem to say, hey, tech can be cute and powerful. Starting at $499, the Mini is ready to claim desk space across the world. Goodbye, old Mini. Hello, new tech buddy. And for the giggles section, we find Jim Cramer, CNBC's Mad Money host, getting hilariously interrupted by his Apple Watch. Right in the middle of his ode to luxury watchmaker Breitling, Cramer's watch decided to pull a Kanye, chiming just as he started discussing the impressive sartorial watch brands. His smartwatch's jealous interruption added a layer of techno-comedy to an otherwise luxury-laden segment, with all the bells and whistles you can expect from one of Apple's brightest stars, the Swiss Army knife of wearables. To wrap this whirlwind of Apple news, it's clear the Apple universe is flourishing, albeit with a few bumpy asteroids, like trying to pan gold without the appropriate shovel in Indonesia. From sprucing up their trusty iPad minis to accidentally overshadowing high-end Breitling watches through typical tech shenanigans, Apple's presence in today's headlines was a multifaceted gem. While investors might be hitting refresh on their web pages for investment updates, tech enthusiasts are setting their eyes on Cupertino's latest and coolest releases. Who knows what tomorrow holds in the wacky, always interesting world of Apple? Stay tuned for the next Tim Cook Show. MicroStrategy is stealing the spotlight today, and you'd better believe the buzz is all about Bitcoin. So what's the deal? Well, MicroStrategy shares are on a roll, trading higher after Bitcoin soared past the $68,000 mark, marking a peak we haven't seen since July. If you're rocking MicroStrategy stock, you're in for a wild Bitcoin-infused ride. Why, you ask? MicroStrategy has carved itself a niche as a Bitcoin proxy in the stock market, holding a staggering 252,220 Bitcoins as of September 19th. That's quite a chest of digital gold, isn't it? When Bitcoin bobs and weaves, MicroStrategy stock tends to shadow its steps. On one hand, it's like being Batman in the Gotham of the stock market, but with fewer gadgets and more spreadsheets. Bitcoin mania hasn't just mesmerized MicroStrategy. Bitcoin ETFs are basking in the glow too. A recent rush saw ETFs pulling in a single-day influx of $555.8 million on Monday. It's like all those Bitcoin enthusiasts emptied their piggy banks at once, just to partake in the digital currency fiesta. Now, marking your calendars could be essential, because MicroStrategy will report its 2024 third-quarter earnings on October 30th, post-market. If you're a numbers nerd, the company will spill the financial beans in a webinar at 5 p.m. ET that day. Bust out your popcorn because according to Benzinga Pro, analysts foresee MicroStrategy chalking up $122.66 million in revenue and 11-cent per share loss. They've missed the proverbial piñata in their last two tryouts, so the suspense is building. It isn't just a flashy day-to-day appeal we're talking about. Since 2020, MicroStrategy shares have outpaced every company in the S&P 500 with a whooping 1,540% climb. It's the stationary tortoise on a Bitcoin rocket. The company's strategy to hoard Bitcoin has paid off fantastically to date, striking a chord among retail investors hankering for leveraged Bitcoin exposure. Nonetheless, gaining admission to the S&P 500 club might still elude MicroStrategy for the foreseeable future. Despite the irresistible stock market narrative, S&P 500 listing criteria demand profitability, a hoop MicroStrategy hasn't jumped through consistently. It's like wanting to join an elite club, but struggling with getting past the bouncer because your tie's askew. Despite the star-studded returns, caution is advised. Crypto, and by extension companies banking hugely on crypto, can seem like the Wild West of the markets, with every sheriff out to chart a law. But fret not. Whether it's dancing in the crypto gains or navigating through its stormy soup, keeping eyes on the earnings report and how Bitcoin continues its gala will be absolutely riveting. Sit tight, investors. Whether taking a bullish plunge, starting conversations about advancements in volatile digital currencies, or seeking safer grounds, this ride with MicroStrategy in the coming weeks promises to be one exhilarating expedition. Hey tech enthusiasts, today's Tech News Spotlight is all about Oracle, and boy, do they have some headline-worthy updates. From reflecting on the astonishing returns of its stock over the past decade and a half, to a massive new cloud project with the US Army, Oracle is making waves. Let's start with the financials. Have you ever wondered what holding Oracle stock for 15 years might do to your wallet? Imagine this. If you'd invested $1,000 in Oracle a decade and a half ago, you'd be sitting on a hefty $7,811.39 today. That's right, Oracle's outperformed the market with a remarkable 14.63% average annual return. Those are some serious gains, no doubt driven by their robust market strategies and innovations over the years. Next up, Oracle's stepping up its game with one of its most ambitious projects yet, the migration of the U.S. Army's integrated personnel and pay system to Oracle's U.S. Defense Cloud. This transition isn't just a tech upgrade, it's a monumental leap towards streamlined efficiency, security, and enhanced capabilities. With over 1 million users, this project is the largest implementation of Oracle's PeopleSoft globally. In a nutshell, the Army's IPPSA is getting a hardcore upgrade, all thanks to Oracle, who's teaming up with Accenture Federal Services and Red River. This cloud migration is set to revolutionize Army HR and IT. Think simpler pay processes, better resource transparency, and top-notch data management, all while cutting costs. By moving to Oracle's secure and flexible cloud, the Army is ensuring that soldiers have quick access to reliable pay and personnel data anytime, anywhere. Plus, with Oracle's prowess in advanced analytics and AI, the Army's poised to harness the full power of innovative tech. These stories underline how Oracle is not just a tech giant sitting on past achievements, but a dynamic force actively sculpting the future. The collaboration with the U.S. Army not only highlights Oracle's capabilities in managing large-scale projects securely, but also emphasizes their role in critical advancements in cloud technology and AI. This is the present and future of smart, effective digital transformation. Got thoughts, opinions, or maybe predictions on Oracle's endeavors or their stock potential? What do you reckon about military systems moving into the cloud realm, especially in terms of security and efficiency? I'd love to hear from you. Drop your insights and comments below. Let the conversation begin. All right, Buckle up, tech-loving investors. Let's unpack the exciting and slightly nerve-wracking saga of Supermicrocomputer. Given the current intrigue-filled data, here's my 2 cents on whether to sell, buy, or hold this stock. Today, Supermicro finds itself in a legal veritable soap opera with all the potential twists and turns that even the best binge watch could deliver. With multiple class action lawsuits looming, Faruqi and Faruqi LLP and Khan Swick and Foti LLC claiming all sorts of corporate mischief like exaggerated sales, the disruptive elements can make any potential investor go, uh-oh. The DOJ taking an interest certainly adds gravity, akin to discovering there's an extra drink in your soda can, but with far greater consequences. Financially, the company's been on a wild ride. Despite a sharp 6-month decline of over 51% in its stock value, Supermicro has succeeded in showcasing enviable strength within the AI infrastructure space. It's like that roller coaster that isn't over until the very last loop, and we're still mid-loop. These excursions around moving averages and Bollinger Bands forecasts suggest an upcoming breakout that could go either way. So, what do we do? Buy, sell, or hold? Here's my take: hold. While the legal shadows and investor jitters might suggest a sell to avoid potential drama fallout, the AI infrastructure capability and upcoming earnings could pivot the narrative. The intrigue holds enough potential for course correction, provided that leadership navigates these choppy waters smartly and transparently. Consider this: handling legal battles is challenging and typically suggests volatility. However, if Supermicro can bring some credence and clarity to their operations and put legal matters to bed without substantial damage, the rebound in the diversified tech offerings presents a real pathway to growth. Analysts might be on the fence, but innovation can offer a comfortable to see past the immediate clouds. But hey, I'm not your financial advisor, and never forget, investing includes risks. Please do your due diligence, delve into your research, take into account your risk tolerance, and consult with a professional if contemplating any significant investment changes based on this roller coaster narrative. The world of investments is a thrilling storyline, and you're the main character. Make sure your plot twists only based on good scripts. It's been quite a whirlwind in the tech world today. Supermicrocomputer is in the midst of legal dramas that could rival any soap opera, while Apple faces some hurdles in Indonesia, yet delights tech fans with a freshly upgraded iPad mini and an accidental smartwatch interruption on live TV. Meanwhile, MicroStrategy basks in the Bitcoin glow, soaring alongside cryptocurrency highs, whereas Oracle shows off its impressive stock returns and major cloud collaboration with the US Army. Clearly, the world of tech is as unpredictable as ever, with each company's roller coaster having its own unique twists and turns. Whether you're eyeing tech stocks, laughing at tech blunders, or just fascinated by the ever-evolving landscape, today's stories serve as a reminder that innovation keeps sparking reactions across the globe. Don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. Tune in tomorrow for your daily dose of tech thrill.